Morning, everyone. Give everybody an opportunity here to get in. Needless to say, yesterday's fun, a little bit short-lived. Tens back up to 460, hit 453 yesterday. No real data, and for that part, for the most part, really no data today onshore. We're rolling dwarfs, and we've got a bunch of Fed speak, Williams, Cook, Muslim, and day two of Warsh's testimony. We'll talk a little bit about that in a minute. In the overnight, quite a bit of CPI data across the globe. A lot of on the screws numbers. There were definitely a few misses. I'm just double checking here. I don't think I saw any beats. Actually, a miss in money supply as well, which was good. Nope, a miss there. So across the board, any inflation data that came out overnight across the board was either on the screws or a miss. Industrial production in the Eurozone was a pretty good miss, by the way. In the markets, stocks mostly up in Asia. I would say mostly down in Europe. Onshore, we're indicating mixed. Dow Russell indicating worse. NASDAQ, S&P indicating better. VIX a little bit better. Bitcoin up to 64. Oil, crude, really, and I think we did get above 80 yesterday, but crude testing 80, 79 and change, Brent 85. Most metals are down, dollar stronger versus most currency. And so what's going on? Why is all this happening? Well, we've declared war again on Iran, but yet at the same time, good morning, Bob. Same time talking about getting back to the table. Let me see if I could find the headline that I read earlier. Quote from Trump. Strikes could get really bad in the next week. We lifted, so I don't know if you saw this, but we said we were going to impose a 20% tariff on managing, or whatever you want to call it, tax on managing the strait, and we reached some sort of deal where to turn that into an investment in sort of American industry by a bunch of Middle Eastern participants. I think that's a pretty interesting solution to that problem. I can't find the article off the top of my head, but generally speaking, it was kind of like, well, we're redeclaring war, but we want to escalate our peace talks. So, I think net, I would tend to be a bit more pessimistic than optimistic, and that's what you're seeing being traded right now. But I'll say what I've said over the last week. The data continues to be supportive of the market softening, but the news out of the Middle East continues to be supportive of higher interest rates. Where were MBA applications? Let's see here. Purchase index down to 157 from 169. Pretty big drop there. And refis up from 794 to 821. So refis popped up a little bit. Purchases down. The entire index down slightly, 266 to 259. Just out of curiosity, what are you guys seeing right now? Usually this is a really sleepy part of the year. Apps tend to be a little bit soft. Are you seeing some softness? Even if you're watching this on replay later on, feel free to comment. So what do we do from here for today? You're kind of inching closer to support on 5 and 5.5 coupon. I think, your 5.5 coupon stuff, discretion very well might be the better part of valor. Getting back to Warsh's testimony, they did bring up, and in fact, let me Google that as well. They 100% brought up yesterday's CPI report. So glad that they did that. What he said was mission isn't accomplished. So here's some bullet points. Reaffirm central bank's commitment to bringing down inflation. The U.S. economy, assessment of the U.S. economy, inflation slowed sharply. However, that could be short-lived, mission not accomplished, vows to do my job. What else? It was really, for the most part, a nothing burger from my perspective. Members of the committee have no tolerance for persistently elevated inflation. We're committed to restoring price stability. And when you talk about that, right, that's theoretically some near-term pain for rates, but long-term benefit. Net bond participants probably like that sort of speak because you're trading forward. I saw one quote that I'm trying to find, and specifically around the commentary about yesterday's CPI report. Anyway, so not super excited that this rally didn't hold. The 8:30 open, which was dataless, has brought some relief. We're now slightly better on the day after opening slightly worse, 458 on 10s. So that's nice. We're up 1-2 ticks sort of across the board. So I will continue to reiterate 6 1/4 to 6 3/4 note rate, pretty much full on lock. 6 3/4 and higher is sort of 50-50. I think that these levels are solid but uninspired. And there's not a heck of a lot of risk there. I think your decision is time dependent. Good morning, Eric and Steve. I think 5.5s is sort of a coin flip. On a 1-month chart, where are we? Somewhere in between par 23 high, par. So, maybe not quite mid-board, call it 40%. So that's about a coin flip, right? And then 5% coupon and below, we're just banging 11 ticks better than July 13th's worst levels, but a point worse than June 25th. So, how much risk do you want to take around that support? It's Iran dependent, full stop. Not to sound like a broken record, but the data continues to go in the direction of lower rates. But Iran over the last week, 10 days, has continued to go in the direction of higher rates. To whatever extent you can figure out what we're going to do in Iran better than I can, that would be how I would guide your lock float decisions. So that's all I've got for today. tomorrow, what do we have? Obviously, we're going to have claims. We've got some more Fed speak. I think that's about it tomorrow. This calendar's messed up. Said we were going to get mortgages tomorrow. We're not. Friday, Ginny's rolls. So, or is that, do they have everything a day off, by the way? It would almost appear as though this calendar is a day off. Let me look at my Yahoo calendar here for a second. You know what they say, garbage in, garbage out. What good is trying to look at stuff if what you're looking at is wrong? So we've got claims, of course. We've got Philly Fed, retail sales. So big day tomorrow. So here's a real interesting, and then pending home sales at 2:00. I don't know that, I mean, we care about that, but I don't know that we care about that from an interest rate standpoint. And then going into Friday, a bunch of stuff out of the EU. So we're going to look at that before the open for sure. Not a lot onshore, right? Yeah, some more housing, Michigan sentiment at 10. So, yeah, a lot of data tomorrow and a lot of data that I like. I really like to look at retail sales. I've kind of stopped making calls on some of this data just because there's so much noise and volatility in it with just the current economics of our economy. But it's hard to not think that this retail sales number is going to help us tomorrow, right? Based on some of the advanced data we have, so on and so forth. So I don't hate, particularly down in coupon, right? I don't hate taking on some risk into tomorrow. I don't know that the Iran speak can get any worse than it is. So when we talk about, lose small, win big, I think that the lose small opportunity is the Iran data can't get, or rather the Iran speak probably can't get any worse, right? And what's the likelihood of this data being a blowout? All the feeder reports would suggest small. And so what if we made some progress overnight and we printed a couple of bad numbers on claims and sales? You could see us back to 453 in a hurry. What's our worst case scenario on tens? Unless we make absolutely new lows, our worst case scenario is 462. We're at 457. So I do think that my float lock bias in general, once we get outside of our, is it a closing next week or a closing at the end of the month or a closing in 2 months? Once we get out of that context, I'd say my float lock bias is 10 or 15% more float than it was yesterday. And we talked about this yesterday on that bounce. I said, that was, for the most part, a lock the dip sort of day, especially when we didn't continue that rally in the morning. So bulls and bears make money, pigs get slaughtered. See you guys tomorrow. Thanks for joining live and watching on replay.